Hi, this is our Forex blog for October 27th, 2014. We released a new version today. It's based on the compilation over the weekend. I made about 7 or 8 changes today that aren't in the new release. But I'm just going to do a quick blog video showing how the major currencies did today with their signals, as well as how to use our currency indexes to find profitable trades. Here's the euro. And then the key to trading is small losses, big wins. Here's the first trade, and the initial risk is this. Very quickly into the trade, the stop gets pulled up and becomes break even. And it went up and came down and stopped us out with a very small win, maybe 2 pips. Same thing happened with the second trade as far as the stop moving down quickly. Became break even within probably 10 or 12 minutes. And this trade generated this much profit, about 2.5 times more profit than the risk. And we went long right here. This is the risk, this is the reward, very small profit. And then we went long here, and it actually had a really huge 10, 20, 30 pip, 32 pip profit. So the euro did very well today. I'll just show it on Friday in case you didn't watch that video. Small win, maybe 2 pip loss. Got that back on the next one with a 20 pip win, and then 5-6 pip loss max on that one. It's the pound today. Went long right here, pretty much break even. Went long again right here, small profit. Short right here, very small profit, 2 or 3 pips, and went long, and the market didn't trend up. Here is the euro yen, and there's almost 900 patterns are in this. Let me showcase this. Small profit, loss, small win, pretty much break even, and then today it had about 15 pip profit, and that's it. When the market's choppy like this, I really do not have any patterns that get into the trade. I look for very strong trends and then buy the pullbacks or extreme moves for counter trades. So here's the pound yen, small profit right here of maybe 2 to 3 pips, short right here, 95 out down here, so that made over 25 pips, and then went short right here at 78, got out around 69 for maybe 8 pips after the spread, and then went short right here and made another 10 pips. Went long right here, pretty much break even, short right here, 2 pip profit, and now it's long. So the key to trading is small losses, big wins, and try to avoid the market when it's just absolutely trendless like this, just up down garbage like this. I just pretty much avoid trades during that time. And sometimes that misses trades, but it also misses hundreds of losses a year you would have if I had rules in there that would get in during choppiness like this. You would more than likely lose way more on all the hundreds and hundreds of losing trades than you would make on the occasional win. Alright, so here's another way of trading. Instead of just using our signals, you can use our currency indexes, which let you see visually what each currency is doing. You can see the dollar's trading down today, going up to the hourly moving average, can't get above it. It's likely to resume its downtrend. So this is a time where you could look for sells in the dollar. You want to find a currency that's strong, like the euro, because it's above its hourly moving average. It gapped up Sunday and rallied up to Friday's high. Had trouble breaking above there, pulled back. The yen has been pretty much going sideways, so the dollar yen is a good one to be selling. And let's look at the other 4. The Swiss is strong, the Australian's weak, the New Zealand's strong. So at that time of the day, you can look for euro dollar buys, dollar yen sells. This was earlier in the day, I think. Find the exact time. Yeah, around 4 o'clock. And you can see that at 4 o'clock the euro dollar is going down. It tried to go higher and failed, so that one really didn't pan out. Let's try the New Zealand dollar. 4 o'clock, you can see it went up. You buy the next pullback, and it went up for hours. And let's look at the dollar yen for selling. And you can see pretty much continued down for many hours after that. As the dollar was at the hourly, it was in a downtrend, likely to go down. The yen was strong. You look for sells, you put your stops over the high, and you can see, the wins are significant. And I typically will wait to buy or sell at least a 38% retracement. So if you got short here at the 38% level with your stop above 50, you had a chance to make 10 or 12 pips on that trade. It made a new low, so you drop back in here. If you got short right here, you might get out with a small loss. You go short again with a 68%, and you made money on that one. And then you could just simply draw trend lines and wait for breakouts, especially in the direction of the trend. Here you have a nice little wedge pattern that, the trend is down, came up, came down, came up. If you're really aggressive, you could get short at the upper trend line right here with a very, very tight stop, risk 5 or 6, and in this case, have an opportunity to make 20 pips while risking 5 or 6. So you had the opportunity to make almost 4 times more in that case. And then once it makes a new low, typically, a 38% retracement once it's into the day is a decent amount for the whole day. If you got short somewhere around this level right here with your stop above the 50, it went a little bit your way, came back, almost stopped you out. At that point, I don't trust the trade anytime against you at all. It starts going down, I move the stop down very quickly just in case. Once it goes against you, comes down again. If it shoots back up again, more than likely it's going to shoot up even higher, so you might as well just move your stop down at that point and then use the trailing stop method to get out. But you can see the risk was this, the reward maximum was this. You're rarely going to catch every pip, so even if you got it somewhere right here, you can see the profit was bigger than the risk. And using the currency indexes makes trading quite easy. And a lot of people use our currency indexes in combination with the signals. For instance, today you knew that the euro was strong and the dollar was weak. You could be looking for buys. So you had a small win here, 10 pip win here, and a 10, 20, 32 pip win here. You're focused on buys. And another thing that makes trading easy is using our value areas. And these are based on millions of transactions, and it shows you where most traders have their positions. The yellow line is where on Friday most traders have their positions. The green line to red line is where 68% of Friday's trading activity happened. And typically above the upper value area is a very good place to be going long. In fact, one of our systems trades, when the market is showing signs of strength and pulls back a lot of pips to this level, it's a pretty decent place to buy. And anytime the market shows any kind of strength after finding support here, I tend to buy 50 and 62% retracement. So this last trade right here was the 62% retracement after the market showed improved that it had strength after the two previous swing highs were above the Friday's highs. It's a very high probability trade, and it worked. It went up, like I said, 32 pips. So again, there's about 900 different patterns that this looks for, and rather than spend 3 to 5 years learning hundreds and hundreds of different patterns, which you're not likely to be able to remember all of them, you certainly won't be able to spot them in real time on 10 to 15 currencies. Just put our Forex signals on there, use our currency indexes, do your own analysis, and if you're thinking about buying the euro and you see a buy, get in and use the trailing stop to get you out, and you're going to have some small wins, and you're going to have some medium-sized wins, and again small wins, and you're going to get some big wins. And hopefully at the end of 10 to 50 trades, you're going to have 1.5 to 3 times bigger wins than losses, and you're going to be right more than half the time. And that's what leads to a tremendous trading career.